Good morning, everybody. It is Thursday, April 29th. It's quarter to 9 in the morning. Just want to run through the charts and give you an update on our SP 500 position. So I'm just going to zip through the charts here. We've got the morning Kidco overlay chart for gold. You can see the past couple days we've had a rally from early morning into the afternoon. Yesterday we had a similar rally push up. There is a major, not a major, but a key support level at this 1165. You can pretty much see gold stuck underneath it yesterday, and then it popped and rallied, and it's been testing on top of that for a while. And this morning it's going in a little bit above it. We're about to enter the about the 10 o'clock. Usually we get either a sell-off or a rally at 10 o'clock. So this morning we could see another push higher. It's kind of a tough call because the gold usually goes in waves of 3 days, and these 2 day rallies here in a row. We also had one previous to that, somewhat, and I have a feeling today's kind of a mixed signal. I'm not feeling if it's going to go up or down today. It's kind of neutral, so I'm kind of steering clear of gold right now. There is a good chance that it is going to go up. And I'm going to show you why I don't want to touch gold right now is because this chart is showing that it's got a good likelihood of going higher, but the actual intraday charts is showing a head and shoulders possible reversal pattern going down, so now they're kind of canceling each other out. I like everything to be in sync whenever I do a trade. It just puts the odds more in our favor. So if I pull up here's the gold hourly chart, you can see gold's in an uptrend. We've had some big volume surges here. Let's see, I'll just yeah, we had a big volume surge here, big volume surge here, another volume surge, and all these surges are very bullish looking there. It's like they're all just bull flags. So they rally up and then drift down on light volume, rally up on big volume, drift down on light volume. And what we all see this morning is this possible head and shoulders pattern, and there's this neckline which seems to be breaking right now. But in the longer run, I'm worried that gold is just going to break these lows and test here and then continue higher. This could be seen as more or less just a large bear bull flag, and so we're just going to play it by ear. I don't want to get involved with gold right now, even though the chart does look pretty good. I just don't see the setup. So that's it for gold. Let me just pull the daily chart up real quick. Okay, so gold, we do have the cycles heading down. We could get a thrust down this morning. Who knows? We might go down to the around the 1155 area possibly. So it does have some room to go down, but like I said, I don't see the trade in gold myself right now, and either way it's already started to make a move lower, so doing anything now is chasing, in my opinion. Gold should be pretty much near support level intraday basis, which it is. It's coming right down into a support level, so shorting here I don't think is a great idea. The neckline was angled up, which is good. In the head and shoulders, you want the trend line to the neckline to be angling up. You don't want it. You don't want the other shoulder to penetrate the previous low. So you don't want a shoulder coming down and rallying up with the neckline angled down. You want the neckline angled up. And what that does is that simply just adds fuel to the fire. So it's not a very straight line here, but what happens is when this neckline gets penetrated right here, it causes the thrust of sellers, everybody on that neckline, and it'll push it down to this next support level quickly. And so if you can short the top of the shoulder, which is what we're always looking to do, you quickly are in the profit, and once it breaks down, you're quickly in the money, and you'll be sitting at a first support level where you can take some money off the table. And as long as the selling can hold up, once it breaks this other low, a horizontal low on the previous left shoulder, that'll send a thrust down much farther. And of course you can do a measured move simply from the low of that shoulder to the high, and you could calculate that move down, which pretty much puts it right into the middle of here. So that's kind of how you do the head and shoulders. If the neckline is angled down, the first cell down below, let me just quickly draw it here, because necklines are pretty important. I'm not a fan of a declining neckline. You always want it rising up. So in short, this neckline, once you get the breakdown, you get a thrust of selling. It'll bring you to the next level. Once that level's broken, you'll get the full measured move thrust down, which is usually from the low of the shoulder to the head. So you're looking to 1155, 1152 area. But if you got a neckline that is angled down, let me just draw. Say this shoulder came down to here and then rallied up and started to head down. What you're seeing here is a neckline like that, and what happens is when this low is broken right here, it washes out everybody. It takes that first downward thrust out of the play. So now all these people in here are now washed out, and it's rallying up. Yeah, you'll still get a good move down to the neckline, but the thing is it won't. It just won't be as strong as a move, because you're not getting a break here with a thrust down, which is what we're seeing. A lot of these people, pretty much the left shoulder got washed out right here. So with a rising neckline, you're actually getting the left shoulder and the right shoulder all flooding out in sync. The left shoulder, pretty much they all bail out on this first trend line, and the right hand shoulder actually bails on this following low and send it down even further. So I hope that makes some sense, but pretty much when you're looking at head and shoulders, you want a rising neckline. Okay, so let me just jump to the S&P. Yesterday we went long the S&P in the morning, and pretty much the market got crushed on Tuesday, and it was way oversold, similar to what we saw on the 14th of April. And we're just pretty much, I think the market is topping out here, and but either way, the S&P was way oversold on Tuesday, so we jumped in and we're just going to let it drift up. Hopefully big volume steps in and pushes it up, but I'm almost expecting just a light volume drift, almost to set us up for a short position. Once it drifts up into near the top of this range, depending what the market does, we could take a short position. And if the market continues this correction, we could get a really nice down thrust, but we'll have to play that by ear. So that's where we are. We got in yesterday morning and it's rallied up. Currently it hit our price target of 1197.75, which is 1% return. If you're trading CFDs, that's 100% return. Let me just, here's the intraday chart. 60-minute of S&P. We took some money this morning, pretty much right through this level in here, 75, right in here, and that was our 1% move up, which is the key kind of point that I want. And our next resistance level is going to be the 1206 area. Brings us right through the other. If it gets to 1205, you might want to take some money off the table. We'll have to see if the price starts to get jumpy. It starts to jump up and down with some rising volume. Then take your money off a little short, because once you see volume rising and prices start to jump, you know it's getting exhausted and tired, and that is deep into a resistance level at 1206. So you can take it a little early if you want. It's sometimes better to do that, but our key goal level here is 1206. Anyways, that's it for now. I'll update you guys in the chat room, and I'll talk to you later. Bye bye.